Happy Friday, Eric Bible with the Bible team at Neo Home Loans. Relatively quiet week, and it's really on the backs of anticipation in next week's Fed rate hike decision. More on that later. This week, ultimately, mortgage rates held the range. We're still comfortably below that 7% threshold, and really it's a welcome relief to our buyers. As we know, home prices and home available inventory continues to be completely out of balance. Home prices are continuing to rise, and inventory is not getting any better. This week, there were more signs that the Fed's fight against inflation is working, in the sense that inflation is moderating, and we're seeing demand at the consumer level and production level ultimately decline. And that was affirmed both in retail sales that was released earlier this week and the industrial production reports, both a miss in our favor. So really the question becomes, well, why will the Fed ultimately hike rates next week if their actions are in fact working and the market is seeing those results? And it's here that ultimately the market is priced in the 0.25% rate hike next week. It's a foregone conclusion that will take place. So really no surprise there. And again, the question is why? And it's really the Fed does not want to contradict what they've already put out there. They are still not happy with the inflation results. We're not at that core rate target of 2%. And we're still seeing a relatively robust labor market, despite kind of the cracks we've seen as of recent. So again, markets fully anticipate a 0.25% rate hike next week. What the market is eagerly anticipating for is the comments that will come from not only the committee within the minutes that will be released, but as Jerome Powell takes the podium. So here where, yes, rates have moderated, compared to where they were 3 weeks ago now, we have not seen them really break this channel. And it's in anticipation for what he will say. And really what the market is looking for is a clear direction that we see an end in sight in this aggressive monetary policy stance. That said, should we hear and see Jerome Powell confirm that, hey, we're seeing moderation on inflation that the committee is happy with, that we're seeing labor markets start to show cracks and weakening, I believe, as do the markets, that we'll see a pretty substantial rally from the rate side. So definitely watching that closely. And obviously, as that info comes together, we will share. Fed rate decision is scheduled for Wednesday, July 26th, which is next Wednesday. So in our Friday update next week, we'll have a full recap of that information. Second component, as I opened with, was around home price appreciation and the fact that home prices are now throughout the nation, here in San Diego, Southern California, we're seeing them start to challenge all-time highs. And again, that narrative that we're experiencing a housing crash, clients saying, hey, we're going to wait for prices to come down. Well, now we're seeing, again, confirmation because inventory is so low, home prices continue to accelerate. And this narrative around, hey, we're going to wait, we're going to pause and wait for rates to come down in anticipation that home prices will decline as well. Well, the American consumer and American buyer is coming to terms with the fact that rates are these levels, and that this problem around availability of homes for sale, which in turn is driving price, is not going away anytime soon. So again, the message we need to continue to deliver to our clients is where, yes, it's uncomfortable now, it's only going to get worse as rates come down, as there is a generational swing in a new available inventory coming on market. It's just not going to be a problem that gets fixed overnight. So I've included an article that I came across in Yahoo Finance that wonderfully articulates this message as well. And I strongly encourage you all to take a look at it. Lastly, California Dream for All, a shared appreciation loan. It's coming back. If you remember, this program offered through the state of California provided up to 20% down for first-time home buyers to purchase a home. This program was rolled out earlier this year. There was $300 million in funds available. Those funds were gone in record time, less than 2 weeks. Now, there's been an additional $200 million allocated. They have not given a specific date. They've alluded to fall. Obviously, we will continue to communicate when that information comes forward. This program, though, commanded massive attention, curiosity, the list goes on. So clients that wanted to take advantage of this strongly urge to get their ducks in a row now. As we saw before, is moment the funds were procured and released, they were taken. So here, do not miss this opportunity. If you have clients that wanted that program, start getting information together, preparation for when those funds do come out. And again, like I mentioned, I will continue to update progress around the California Dream for All. As always, we're here to address and assist with any questions, scenarios that may arise. Make it a great Friday and an even better weekend. Thank you.